Hi all and welcome back to another episode of the ICIS Energy Foresight podcast. We are recording this just after Gastech, the world largest trade fair for the gas market, which was in Milan just a few days ago. Today with me I have Ed and Andreas that will let me understand what happened there and what are the implications for the gas and LNG market going forward. Hi guys.
Hi, Matteo.
Hi there.
Welcome, and it's a meaty episode, and so let's jump into that. I think the starting point is to ask you guys your reactions from Gastech. What do you make of it, Andreas, and then Head?
Yeah, so Gastech, that's really the place to meet for the LNG and gas industry globally. And all of the large corporations, the big players in the market, they were present at Gastech. We saw a lot of US LNG suppliers there. They are omnipresent at the trade fair. And there's also a strong presence of Asian players. You see that in the stands, you see that in the crowd of people walking around. And lots of deals have been made. So that's also a place for contracting activity.
Yeah, and Matteo, I mean, from my side, really a visual representation of the state of the market. Yes, very big commercial presence from the US LNG side, but also very political, very strong political US presence and narrative alongside the commercial side. And I think from the EU Commission as well, very strong message there about how Europe is open for business, open to buy more LNG from the US, which is a big change from a few years ago, but that's the reality of the European market now. That was very striking. Yes, it's a massive global event, but I do feel there was a feeling that it was almost a time of change in the market, the start of a next chapter. Additional LNG coming on supply from this year. We're moving to another phase of the market, more supply and lower prices. I think maybe a little bit premature to say Gastech was that moment, but it was something very much in the mind of the people we spoke to, the delegates we spoke to, the conversations we had about our expectations for 1, 2, 3 years ahead and how different that could be from the last 2 or 3 years behind us.
Yeah, I would definitely echo that. Ed, I mean, I wouldn't say that you could feel that history was being made, but there was definitely a different, definitely a different environment and a different feeling around. See, if fact, bit more important to a certain extent. And as you said, lots of deals were announced at Gastech. Lots of, a lot of LNG volumes that are coming to the market as a result of that, and quite soon. Let me ask you one question, because obviously there are multiple questions, but I think from our perspective, with all these LNG looming and kind of oversupply that everybody's already starting to talk about, how this is going to reshape global pricing and contract structures overall. What's your take on this?
Well, I think the first thing is that there are some developers who are very keen to do contracts now because they can see buyers may be more reluctant to do contracts when the oversupply kicks in and prices do fall. It's typical buyer behavior. So we might actually see more production sites taking a final investment decision in the coming months, adding to the supply wave over the next few years to get through that window that remains before the market becomes oversupplied. We're a little bit cautious in calling an official start to the oversupply. Projects can, of course, get delayed in startup. It doesn't take much to push a plant startup back by 6 months or a year. And we saw that in 2015 to 2020, the last real period of oversupply. But we do expect later in the decade, our forecast is for the peak oversupply around 2028 to 2029. Based on current forecasts of plants starting up, that would be a period of lower prices, lower spot prices. They haven't been below $10 per MMBTU for several years now. And, before that was normal. So we've been in a new normal. The market expects prices to fall, but perhaps not over the next year. There's still a cautiousness about how the role of Russian LNG and gas in Europe could play out, if that could be speeded up, the end of that before the end of 2027. So we're a little bit cautious, but this is the biggest growth in LNG production we've ever seen over the next 5 years. Quite a lot of buyers out there are heavily contracted. China is heavily contracted, so we could see Asian buyers turn sellers, also competing with traders and producers to place volumes in the market when the market turns long. So it could become quite messy when this oversupply really kicks in, which could provide opportunities for buyers. One of the themes at the conferences was how much LNG and gas demand could come replacing coal, and to balance renewables, volatility in Europe and elsewhere. So there's plenty of demand that can come before prices really fall. But I would say that, this frenzy of contract activity is going to slow down as the market turns. And I think sellers are very aware that they need to get done what they want to get done soon before the tone changes and the focus perhaps switches a bit more to spot trade and lower prices compared to contract activity.
So we've just heard from Head, all the deals and obviously how the LNG landscape is changing globally. But if we look at Europe, Andreas, and Trump during the summer visited Europe, and there was a meeting with the European Commission, President von der Leyen and delegation, and there was the deal around the $750 billion US dollar of energy purchases that Europe committed to. But can we say that effectively Europe is now replacing Russian gas with US LNG? And if that's the case, what type of implications will that bring about?
We can effectively say Europe is replacing Russian gas with US LNG, and we can clearly see that in our ICIS data. So American LNG is making inroads into the European market, and it's now gaining a market share of around about 1/4 of the European gas market overall. So 1 out of 4 molecules in the European system has an American origin. And that's really a big change towards compared to last year. So US LNG has been growing over the past 2 or 3 years, and it has been really growing yet another way this year in 2025. So as of January, we see record high US LNG inflows. Overall, the situation is the European market has strong LNG imports this year. So we are expecting around 110 million tons of LNG demand from Europe. That's very strong, and it's close to what we've seen in the record high year of 2022. And so now the European prices, they are reflecting more and more a global LNG dynamics. So we see prices reflecting global dynamics such as weather in Asia, geopolitical drivers. All of this is playing more of a role in the European market given the strong presence of LNG.
And this is quite relevant, Andreas, the point you make around Europe obviously being more exposed to the global landscape. If we look at the different basins, look at the obviously Atlantic side and the Pacific side, and we're moving to the pricing. How has the spread between the TTF and the East Asian Index, our EAX, reacted to the news, and what can we expect actually now that is that as it headlines and everything?
Yeah, I mean, the first thing is close correlation. So that's the reason why when we meet Asia sources at Gastech, they ask us about TTF and European gas markets, because the TTF impacts sentiment in Asia and globally elsewhere in the Atlantic basin. So really the last few years, what happens on the TTF is often the key driver in the EAX and Asian spot prices, and sometimes the other way around. Much of this year, Europe's been at a small discount to Asia. TTF's been at a small discount to Asia. But this is really a play about US LNG. Europe needs to attract more LNG. A lot of that's coming from the US. The US LNG will go to the highest priced market. So Europe, although it's been at a small discount to Asia because it's a shorter distance to the US Gulf, it's still economically, financially better to send the majority of those cargoes to the European market. So that's really the play between Europe and Asia at the moment. Europe's gone to a small premium right now, perhaps because there's more Norwegian gas maintenance going on and there's a high dependency on LNG. And it's a volatile spread, but the spread is very tight. So later in the winter, we see Asia at a small premium. I would say neither market has really been giving a very clear, strong demand signal relative to the other in recent months. And that's what we wait to see. When will there come a time when one market breaks out compared to the other? It's hard to foresee that at the moment because Asia's heavily LNG dependent. Europe's heavily LNG dependent. So they need to be in competition with each other. And it's really a US LNG play. But I would say looking further ahead, that's where things can change. In a lower price environment, while there'll be a lot of focus on the outright Europe and Asia prices, it's also in relation to the US Henry Hub price. And that's something that we need to start looking at in even more detail as we get into an oversupplied market. You know, how financially viable are those US LNG cargo loadings? That's perhaps not one for today, but it could be one for 2 or 3 years' time. And that really is, you know, the critical shift in supply and trade flows that we're following very closely.
And again, this is super interesting. And Andreas, we from a volume perspective, we have released our long-term scenarios, our global LNG scenario back in April, where we already anticipated the market turning long next year. We're now working again this on the forthcoming winter outlook. So kind of as a spoiler here for our customers. Can you tell us what are the near-term implications of everything that we are seeing and everything that was discussed and came out of Gastech, and how can we, you know, what can we expect over the next few months?
Yeah, so global LNG markets are likely to turn into a period of oversupply, which can last quite long, almost a decade in our outlook. And that has implications already today. The very fast ramp up of US LNG terminals means there is a lot of pressure now on LNG suppliers to be quick and to close deals as soon as possible. Suppliers know there will be a period of oversupply coming, and that's looming. So they want to be the first in line to close contracts, long-term contracts, and to secure offtake for a long time at current prices, rather than wait another 2 or 3 years when prices may plummet, according to today's outlook. And yeah, overall, that means markets turn into a rather buyer's market, where buyers are a bit cautious to secure deals now, and they'd rather wait and maybe secure spot trades later on, or wait to close deals with lower prices than in future. And that means the spot markets are really driving. That means LNG spot markets are really driving European prices more than before. And that means Europe is dependent a bit on global dynamics, such as weather in Asia, any outages worldwide, so the supply situation, as well as geopolitical events.
So there's a lot of LNG to digest, as we've just said, and we didn't want to spoil it, but yeah, there's more to come. We're working on the winter outlook. We're closely monitoring, you know, the spread between the two sides of the market, where the demand for LNG is actually battling to attract cargoes at the moment. Let's see what's going to happen next. But for the moment, thanks both. It was very insightful. I enjoyed it a lot.
Thanks, Matteo.
Thank you.
And as always, if you want to know more about what we do on Energy Foresight, and everything that we cover, you can just log in to ICIS.com or reach out. Until the next time.